Good afternoon, traders. This is Michael and Paul coming to you from GammaEdge on Sunday, March 27th. We're going to do a case study of Apple and the correlation to our market model timing and how to look at the wing charts day over day for interpretation for your trading and timing of a very liquid stock and a heavy weighted stock for the SPX. So go ahead, Paul, take it away.
Sure. Thanks, Mike. So we're going to start off with a presentation that you're familiar with in the morning call, and this is a quad chart. And basically, for this presentation, you're going to see a decrease in days from the lower right up. So you can see Apple 11 days ago, 10 days ago, 9, etc. Sorry. So the key here is that the wing chart presents the cumulative gamma, short-term gamma, on both the negative side, which is red, and the positive side, which is green. Although there are units associated with the scales that are on the right and left here, for the purposes of this presentation, don't get caught up in the overall units that are here. What we would ask, though, is as you do this and develop the skill yourself, that if you use the red cumulative gamma exposure level here with the left side, that you stay with that throughout your analysis, and the right side is the same way. So if you use that for the positive, and just because it's easier, just make sure that you don't flip scales or whatever the case may be. So what you're looking at here is you're looking at Apple as of the March 10th close, and you can see the overall net gamma condition. The red wing is bigger than the green wing. And what that effectively means is that we have more short-term negative gamma within the structure than we have positive gamma. It doesn't necessarily become actionable at that point. It's a descriptor. It tells us the overall state of Apple at that day. And people have been bearish on Apple, and therefore we have more puts. And if you have more puts and they're shorter-term puts, we're going to have more negative gamma. All right. So when we take a look at Apple 11 days ago and we look at it 10 days, and this will be the methodology that we use for this presentation, you can see that we're going from about 40,000 relative number here up to 80,000, which we have here, or excuse me, another 40,000, which we have here. Now we've colored these blue just to kind of show that they're not changing, and the overall over here on the left-hand side, you can see we've gone from 250 relative number again. We're not going to get concerned about the units, but up to 175. So we've dropped from 250 to 175 on the put side. So when you drop puts, what that is telling us is that the short-term gamma is leaving the complex. And although we're not getting a confirmation or a confirming number here on the right-hand side with the positive gamma. Mike, anything you want to add to that?
No, I think it's important to continue to do your daily homework and look at these scans and the liquidity watch, or run these of these highest weighted stocks to stay on top of the market and anticipate and be ready whenever the market does decide to give us an uptrend.
Right, exactly. And even, building out these quad charts in your favorite stocks and being able to track them day over day. All this data is available, obviously, in the Gamma, in the Discord, GammaEdge Discord. So would urge everyone, if you have your favorite stocks and are tracking them, this is one way to track them and have a good instantaneous view. So let's continue on here. So we've done 11 days ago, 10 trading days ago, and now we're going to go to 9 trading days. Before we do that, though, let's take a look at what the market model was. So the market model, this is through 314 EOD. Why is this important? So this is the morning of the 15th. This is the exact presentation that we put out in our market call every morning. That's available on YouTube and within the Discord. And basically, the morning of the 15th was basically saying to everyone, risk off. We colored this red. We basically said we did not get a confirmation in the cumulative tick, which we use as a predominant market model here. And even though the SPX was rallying during the day, we didn't see that confirmation. We also saw heavy selling by the institutionals up here, which in terrible breath. So we colored everything red and we said, we've got a problem here. Right? So the market was not conducive as of the morning of the 15th to going in. What was Apple telling us? Apple, again, going through the 14th, so from the viewpoint of the 15th, actually, you can see over here, this is the previous day of the 11th. So Monday, the 14th, we continued to see a decrease in the overall calls, and we saw an increase in the overall puts. And although this is gamma negative gamma here and positive gamma here. The dominant here is the addition of puts and the reduction of calls. And so basically people were still bearish, and that corroborated what we saw here with the overall model here. So although people were wanting to get into these rallies, there wasn't necessarily confirmation in the market model, in the cumulative tick that we use, as well as in Apple. Mike, anything to add here?
No, I think that definitely confirms with what we're seeing with the gamma scans also. We were not seeing any growth stocks or any technology stocks being populated yet. So again, just another confirmation.
Right, right. And so, when we look back here, we said, this has got a bait, right? If we're going to see anything happen on the positive side, you obviously have got to get some form of reversal, or you've got to see something here. And we didn't have it. We finished on the lows of the day, which was a very, very negative model. So let's go ahead and take a look at now the 15th. And again, this is viewed from the morning of the 16th, right? So when we do that, we had just ended at the lows of the day, and we started right off taking off here on as you can see on the at the circle 2 here, and we actually finished very, very strong relative to how we sold off here at the end of the day. And so for that reason, we said, okay, and remember, this is from the morning of the 16th, so this is going to be the day after, and we're looking back and saying, hey guys, wake up, get your shopping list ready. This is what this tells us. When the market model reverses like this, this is a key indicator. Now, in all candidness, I've not seen a lot of reversals that start at the open of the day and continue forward. Typically, we continue down, the books clear, and then we get a midday reversal. Sometimes it correlates with Europe closing, sometimes it doesn't. We were a little suspect of this, but we did say, hey, it's possible that we've got an upside move here. Get your shopping list ready. So what does that mean? So here we are on the morning of the 16th, looking back now at the end of data on the 15th, and we saw a significant rise in the number of calls, the positive gamma that had been added to the complex. And we also saw, you can see, a significant drop in puts. So we saw puts being closed, and price actually moving a little bit off of where it had been before, and we saw calls being added. This is constructive, and so this actually confirmed the model that we had here, and it told us that Apple was going to be a participant in this, or potentially could be a participant in this. Okay, Mike, anything to add there?
Yeah, we did start seeing Apple populate the positive gamma scans. The GEX COI scan actually had XLK moving up the list now that we've added the ETFs to those. So those are easily viewable to see what's the strongest ETFs on those. And Apple was below the 200-day on the 15th, tried to rally back up to it, but rejected. And then moving forward, I think it's an important TA level to see how Apple acts around the 200 MA.
Great, thanks, Mike. So now let's take a look, and again, this is through the 16th, and the 16th was a Wednesday. If you remember, Jerome Powell was coming out and speaking, I think, starting right around 1 o'clock or so, and the market sold off then, et cetera. And then after that was all digested. We had a very, very strong finish into the day. So for that reason, we still had some hesitancy going on here, but you can see the SPX overlaid here, very, very strong positive behavior. Again, through the 16th. So again, this was the morning of the 17th. And taking a look back, let's see what this looked like. Now, remember, we had a little bit of call gamma leaving the complex, but look at the relative drop here that we saw relative to what we had here. So we finished the day up here on the March 15th, right around 175, again, a relative number. And you can see being up here at 175, we've dropped now down a significant amount. More puts are being reduced or removed from the overall system, and not a huge drop in the overall amount of calls here. So again, we're starting to see more and more call gamma build in. And just look at how the structure here is starting to really start to dominate on the positive gamma side. Mike, anything to add here?
Yeah, the March 15th was when we got back above the 200-day on Apple with a pretty large bullish engulfing. So that's an important psychological and technical area for institutions, individual traders. So
Right. So that's this area here. Here's the 200, this brown line that you see right here. And I think this is basically telling us, for all intents and purposes, that, you know, the failure of the 200 on the previous day was actually you know, folks were able to come in and get into the overall system. Let's continue this, looking here. So that was, you know, looking at the 16th here. As we advance further, you know, here was the end of the 16th, and we got that continuation here going into the 17th, and you can see that we closed the day again much higher, right? So this is very significant, because this is basically saying the market is really starting to rally out of here. We're getting these continuation patterns across each of the days. Let's go take a look and see what Apple was telling us on that day. You can see that in relative numbers, we're below this 50,000 number. We are moving up here, and you can see over here virtually unchanged now in the put structure here, but we are seeing some positive gains here on the call side. So again, throttles up here for Apple. Things are looking fairly good. Mike, anything to add?
No, I don't think just by itself that the cross back above the 200-day or just these calls are, you know, being added and puts decreasing are your instantaneous actionable points. But I think that needs to be an area that you need to incorporate into your trading plan and manage your risk against those levels.
Right, exactly. So now when we take a look and say, okay, this is last weekend. We've gone through Friday, the quad witching. So everything is closed out. As I said, we got that reversal. We're starting to get the continuation patterns. And again, these are the charts that we actually use in the morning call. We just pull them over into this presentation. So you have all this data if you're following the morning call. And you can see that Friday, 318 was a very, very strong day. And as a result, you know, we're coloring everything green. There was no reason. We had cleared some, what we call the historical ribbon, which is an area of past failure. We finished high on the filtered cumulative tick, which shows the institutional participation. So things were looking really, really good. And when we take a look here, as of the March 18th close, you can see we continued to have a decrease in puts, as well as an overall net increase here, a fairly significant net increase from 50 to over 60,000 on the call side. So short-term gamma, even with the monthly expiration, was still being added. So people were adding for the following week, the week that we just concluded as we record this. Mike, anything to add there?
Yeah, that 318 day, even though it was a expiration day, was one of the highest volume days. Obviously, it might have been skewed a little bit from expiration, but we got back above the 10 and 21 day. So on a lot of trading systems that people follow, that's an entry for many people, kind of coming out of that little flag and then a large move up there. So
correct. Yeah, correct. And so, you know, with 318 here and 321 here, so we go through that Monday, we saw a little bit of sideways action, and then after the euro close, we saw some, you know, saw a decrease in the cumulative tick, a little bit of, you know, the filtered cumulative tick, showing some selling here for that reason. Instead of having the full up green, we put some yellow in here. We called that we were at a crossroads here. And as far as the as Apple was concerned, look at this. This was pretty telling also, right? So we went from 50 to 60 here. We went from, you know, a little over 60 here, now well up over 80. So people bought the dip on the Monday here. And this is pretty important. Although some downside protection was added, and we feel this is probably because of this weakness that we saw here, you can see that correspondingly the cumulative gamma, positive gamma on the system went up quite a bit. So Apple was still being bought far more than it would downside protection was being added. I feel that's a fairly significant thing. Mike?
yeah, I agree. It was showing relative strength of the market on all aspects there. And if you're in the trade, I mean, I think this gives you more confirmation just to stay with the trade. There wasn't a significant jump in the puts or a reduction in the calls. So you just continue with the trade.
Yeah, correct. All right, so let's take a look now. We've just completed Tuesday, the 22nd, and you can see a little bit of weakness across until the European close there. And then after the European close, you know, it's again, more walking upwards that we're seeing here. Didn't see a lot in the behavior of the institutions here, and certainly not as marked as what we had seen in previous days. And for that reason, we kept the yellow light on the overall system. Again, this chart was presented in the morning call of that particular day. But let's go take a look at Apple. What was Apple doing this day? And you can see in the case of where Apple finished at near 80,000, relative number, again, we're not concerned with the units, you can see now on through the 22nd close, huge jump. A lot of call gamma was being opened in the position, and relatively no change on the put side. So no downside protection was being, short-term downside protection was being added. Not that it had a measurable gamma impact, but a tremendous amount of call gamma was being added to the overall system. Mike, anything to add here?
Yeah, on a technical analysis, we took back the 50-day on that, and that's a huge level for institutions and traders. So that was a very important day, I think.
Yep, and that's that's why this influence of gamma and of TA can really bring both worlds together and show us what's going on here. All right, so let's continue on here. So looking at the 23rd here, you can see that we had some weakness into the day, again, represented here by this yellow-green, still bullish, but we had some weakness that was that came into the end of the day. Let's go take a look and see what Apple did. In this particular case, we saw some monetization. You can see that the prior day we were up over this 120,000 relative number, and that we actually saw it come down just a little bit, not a lot. But note, no additional downside protection in short-term gamma was being added. We feel that that's very significant, because when we see something like that, this is not, even though you see the weakness that you saw here, it is not confirmed by a leader like this, and we think that's pretty significant. Let's go ahead and take a look now through the 24th. And what we see here on the 24th, again, we saw some continuation of weakness in the cumulative tick as we started into the morning, and then it reversed and continued upward, and we finished at the high of the day on the 24th, which is very significant. We colored it green for that reason. Again, this is viewed from Friday morning, the 25th. When we take a look at Apple in this particular case, we can see that we had a major increase from 120,000 up to nearly 175,000 relative number. You can see a lot of short-term gamma being added. This is most likely for the Friday expiry, and you'll see why here in a second. And again, no downside relative to where we were before. No downside numbers being added here. So downside protection was not being added. Mike, anything here?
Yeah, on the 24th, it was just a large bullish engulfing day, and Apple finished almost on the high of the day. So continue to show strength to the market and a market leader.
Correct. So looking here now at this final slide, and this is literally what we'll start the day tomorrow with, looking back now at the 25th. So this is Friday, the 25th action. And you can see we've thrown a yellow up here with the green. We still think that is very bullish, very positive potential to the upside. We need to see a continuation upwards of this pattern. But for right now, we're going to color this, a little bit of cautionary. Be wary of this. Now take a look at Apple. Apple actually had a large monetization with the options expiration. We dropped a significant amount in short-term gamma, but here's the key. We're not seeing downside protection. So even though we've seen a significant reduction in short-term positive gamma, it's not being confirmed by people panicking and exiting. For this reason, we're going to color Apple still bullish, right? We may see some opportunities to get into it in the following week. And if we see any form of continuation here, that'll be our trigger to continue to enter and manage risk with Apple. Mike, anything to add there as we wrap up?
No, I mean, we've had a lot of questions on how to interpret these wing charts and how to look for trades moving forward. So I'd encourage everybody to do this type of weekend homework and workflow and be prepared on these large liquid stocks and incorporate it into your trading plan. And this is how you can use the market timing model and the wing charts to really to get an edge, I think, in the market. And this is what we're seeing.
Great. Yeah, we know this is a little longer presentation. If you've made it this long, we appreciate it. If you're interested in these wing charts and interested in having this type of data, available to you. You can get to us at this www.gammaedge.us. That'll take you to a Discord sign-up page. That Discord will, once you complete it, will allow you to kick the tires for 14 days. All the tools turned on. We've got a great group there, Mike and I included, and very active in voice, very active in helping folks. We've got very seasoned traders and we've got very junior traders, so all trading levels are welcomed and encouraged to come in. Of course, you can follow us at GammaEdges with an S on Twitter, and you're watching this on Twitter or on YouTube, excuse me. We do ask you to like the video if you like the content, and of course subscribe so you get notified of our next postings. Mike, anything else to add here?
Nope. Have a great week, traders. Hope to see you in the room.
All right. Thanks, everyone.